Well, if you look at the share price of AMC and GameStop, you will wonder, like, really, what is happening? What is causing this to drop so high, so hard, so quick in just a matter of few weeks when pretty much nothing negative is actually popping to justify the share price doing what it's doing now. We were supposed to be at going back to 50. So why are we stuck under 50? Under 15. So let me share with you something that's actually going to change your mind into what may come next, because shorts are running out of shares to short. Or let me rephrase, shorts are running out of shares to borrow in order to short. It may not seem relevant to you, but let me break it down so that it will make more sense. And then you actually come to the realization that, hey, you know what? Maybe I should buy more. Look, for the last 21 days, our text is telling us that the utilization rate is at the maximum level, 100%. You can go to ourtext.com, type AMC or even GameStop, and you will actually see for yourself. According to the Ortex data, it has been more than 21 days since the GameStops, which all the way is also true for AMC, stood at 100%. If correct, this rate implies that there are no more shares available to be lent for shorting. Thus, theoretically, an eventual buy-in can occur if lenders decide to recall their shares. This may cause a short squeeze. Let me pause there for a second. In order to short sell a stock, you need to borrow those shares. In order to borrow those shares, you need to actually locate, meaning I need to know where I should borrow these shares, because at some point I will have to give those shares back. But the thing is, the way short selling or borrowing and lending works, in Wall Street, you as the one lending the shares to the short seller to then short it after borrowing it, you don't need to give them a heads up. You can just decide literally at any given day to just recall those shares, meaning I need my shares back. And for them to give you your shares back, they will have to cover the short positions and exit them in order for them to give you back the shares. And by doing so, they are causing a buying pressure, which ultimately can cause a short squeeze because of the brutal, with no heads up event attached to it, to the shares recall. Let's move on. But this doesn't mean that the short sellers cannot continue shorting the stock. It just means that they need to seek other resources to find available shares. But these resources or additional resources they will need to find, usually they need two things, all right? First off, they need to add either to have additional cash. Well, the cash and the liquidity is kind of drying out on Wall Street. Why? Because of the market volatility. Every single day you see markets going and closing red after red after red days, even though when the market opened, everything was green 1%. It happened again last Friday. So what is happening? Well, with everything is happening, whether it's from an inflation perspective, whether it's from a Russia-Ukraine crisis, it's putting the markets on edge. And that means people don't want to take a lot of risk, meaning they are pulling money out of the system. And that's why we end up with markets consistently going down, 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 and down. So usually, the short seller will go to his broker or liquidity provider and say, you know what, let me borrow you an additional 1 million, 10 million, 100 million, $1 billion, depending on the size of his position. But that will likely not happen in these current market conditions, all right, especially with the DOJ and the SEC investigation going around. On the other side of things, what they could do is they could actually show some collateral, but they used to show Russia debt. They used to show, China debt. They used to show other stocks, the tech stocks, for example. But if you look around, all of these assets are now also less worth what they used to be just at the beginning of this month. Not even talking about the beginning of this year. Just to tell you how bad things are looking for short sellers. So with shares running out for them to continue to borrow them and continue to short, literally it means that this can pop. But we already knew that, so it's not new. The thing is, with the utilization rate sitting at 100% now, It means anytime, any day now, anything can just literally bring this down to explode. Nobody knows exactly what it is or when it's going to happen, but we are on it. We are literally on the edge of it happening. May happen tomorrow, may happen next week, may happen next month. The reality is, when it does happen, will you still be holding?